What's going on, you guys? This is Aaron from Departures Capital, and welcome to the video. In this video, we're talking all about the moves in the markets as gold finally gets back above 2,000. We're seeing record highs in the indexes thanks to Amazon. So these are market minutes. This is your full recap, and we're going to give you guys a little bit more discussion today and focus on some interesting topics. So let's get straight into the video. The last thing I wanted to say, we did drop a brand new interview this morning. Chairman of Silver Elephant Mining, John Lee, talking all about the company. Very interesting opportunity there in Bolivia, and we also have another interesting silver mining company on the way, dropping tomorrow, guys. So that constant steady flow of new and exciting companies that I'm trying to bring to you guys, new interviews, lots going on at Departures Capital. So thank you so much for tuning in, and stay tuned for more. So all right, guys, that's it for the intro. Let's get straight into this video. The last thing I wanted to say, if you do support me, the videos and the channel, is to kindly explode that like button, along with, if you are a new viewer, you appreciate constant daily updates in the markets, a steady flow of new and exciting companies, or you just want to, stay up to date on what's going on in the investing world, then don't forget to catch that subscribe button and hit the market bell for notifications. And let's get straight into this video. And it's almost like the words just couldn't come out of my mouth today, but here we are, and we're moving on. So the first thing we got to do, like we do in every single one of our videos, is comment of the day. So we're talking about Buffett. Yesterday's video was all about Buffett buying Barrick, the reasons behind it, and I appreciate all your opinions, guys. So Buffett did like the physical metal because it does not pay a dividend. What a hypocrite. Berkshire does not pay a dividend. And that's actually true. Now thinking about it, Berkshire actually doesn't pay dividends, but he invests in businesses that do pay dividends. Now, I'm not going to bash Buffett, because I'm sure a lot of you guys love Buffett, idolize Buffett. I think he's fantastic. Obviously, one of the most successful investors in history. But I like to hear different perspectives. That old guy will keep this censored, keeps the dividends in his own pocket. The metals market is and will move forward with or without Buffett. I have more faith in Eric Sprott, Rick Rule, and David Morgan. So, of course, these are industry veterans when it comes to the precious metal sector. So, Eric Sprott especially. I think he's really awesome. Next comment of the day goes to Divinius. Buffett bought back in June, just kept his mouth shut. He probably has more than we'll see with Q3 transparency. So that will be exciting to see for sure, nonetheless. Jack, next comment of the day. I think Buffett is saying the economy is going to pancake along with the dollar. Metals are the safest play. He bought Barrick as opposed to physical because it pays a dividend. If Buffett is being Buffett, he collected a boatload of warrants when he bought. The question is, will his purchase open the door to more institutional investors with gold? And I really think that it will. I really think that sometimes these are the catalysts that it takes in order for a market to continue on, a bull run to continue on. We saw what happened in the MJ sector when things like Constellation Brands started getting into the industry, investing billions of dollars, and we saw Altria jump in, and it obviously didn't turn out the way we wanted it to. But in the case for gold and silver, we're starting to see people who once hated gold, diving into gold, putting over $500 million into one company. So I definitely think that this is the start of a new trend. I definitely think that this will, in fact, open the door to more institutional investors. And like I said, Buffett's one of the most successful investors in history. So even the guys with millions of dollars, even the guys with $10 million, fund managers, everybody's going to, take a step back and look at this and be like, holy smokes, should I take a closer look at gold? Even if Buffett buying into Barrick causes, a number of highly influential, high net worth individuals to reconsider gold, I think that that's just the start. So very interesting times for gold and silver, guys. And thank you for all those comments. Drop those awesome comments. Let me know what you think. Oh, and the last thing I want to say was Doc got some awesome comments. So once again, big shout out to Doc, our full-time editor. Doc from Jason Navarro. And I can't remember if we got another Doc comment. I think we did get one more Doc comment. Where is this Doc? Anyways, guys, that's the only Doc comment, but shout out to Doc for doing such an awesome job. And come on, Doc, let's end this comment of the day with some interesting effects. Now, we're getting on to the market recap. And another thing, Doc's not just the editor, he also guides me and helps me when it comes to, the style of videos. So I want to make this a bit more interactive, a bit more conversational, talk to you guys as opposed to just reading stuff off of the screen. So that's where our recap's going to, be a little bit more interactive. So we're going to talk about what's going on Wall Street. We are seeing the S&P and the NASDAQ in the green, with the Dow, in fact, in the red, and Amazon's up 3.8%. So my question is, how long do you think that this rally can continue for tech stocks? Because It's been crazy. Now, obviously, tech is dominating right now. Where are people shopping? People are shopping on Amazon. Even myself personally, I found myself, not really wanting to go out to the store as much, although I am getting a little bit more comfortable just as Canada right now, it's a lot safer than other places. I find myself doing more and more online shopping, which, it does translate into obvious profits for these companies. All the tech giants, Netflix, Amazon, Facebook, they're all doing better. E-commerce is a real thing. But I'm just curious, when these valuations are they just going to go up forever? Like, that's my question. So let me know in the comments what you guys think about the tech boom. And then, of course, the S&P 500 hit a record high today, guys. S&P on Tuesday hit record highs. This is all because of Amazon, essentially. And we're quickly going to pull up the charts for the S&P 500 just to take a look and see. And I think, it's pretty wild to think that despite this whole global illness, this R word, economic contraction, whatever you want to call it, we are once again at all-time highs. But I really do think that this is because of all the fiscal and monetary stimulus as well. And these giants being such a big component of these indexes. I mean, we've got Apple, Amazon. They're just such a big component that they're just dwarfing all of the other companies that are actually struggling. But that's just the way the economy goes. Now, I wanted to quickly pull up the charts for Barrick just before we get into, the gold and silver charts, all the news for gold and silver, and all the different headlines that I put together for you guys. So it's pretty interesting to see, after Buffett bought, the stock ran basically 12%. We're in the green yet again today. And I just simply want to pull up the details for the company. So with a $71 billion market cap and a 1.19% dividend yield, 52-week range of $17.50 to $40 per share. It's safe to say that, Barrick's looking pretty good right now. If we look at the historical chart, though, Barrick has been much higher in history. Barrick's been above $50 per share for a short period of time back there in 2011. So I think Barrick still has lots of room to run. And gold prices were never as high as they are today. So if gold keeps on running, Barrick should keep on running. And I don't see why the stock can't hit all-time highs. At least all-time highs. I mean, I was saying that for gold. I'm going to say the same for silver, and I think that we've got a long way to go for silver still. So I'm a little bit more bullish on silver. That's why we've been talking about more silver companies. I wanted to introduce to you guys those silver companies that are anywhere from 50 to 100 million with the potential to make some substantial capital gains. So that's why we're talking about that stuff now. Gold is over 2,000 an ounce yet again. Really like to see it to 2014. Up $15 per ounce. If we take a look at the 1 month chart here, the dip has been bought pretty hard, and it's really nice to see gold back above 2,000, guys. I mean, I'm not gonna lie, I wasn't sure how far gold would correct, but this once again, kind of reaffirms that bull market is still intact, and I think the long-term fundamentals are driving it. Whenever we start to see short-term volatility, it's almost like those long-term fundamentals just kick in, push the market higher. And like I said, with this pullback, a lot of people were on the sidelines just watching gold run thinking, oh man, when can I get in on this? I'm missing the boat here. I got to do something if the market pulls back. So I think that that's also what we're seeing. And then as gold recovers and people see it above 2,000 an ounce, yet again, they're just like, well, maybe that's our last chance. Got to jump on the train. So obviously never financial advice, but that's just my personal opinion as to what I think's going on with gold and silver. And the same thing for silver. Obviously silver making a speedy recovery, already back above $28 per ounce to 28.14, and it is holding on to that 26.50 level that I was talking about, it potentially coming into the recent momentum at risk. So back to $20 per ounce, we held on to that recent 26.50 level. And of course, the reason why I painted that was because I went back in history quite a while, and we saw that silver bounced off of 26.50 quite a few times. So I think the next stop for silver is to in fact go above $30 and trade somewhere in the mid 30s. That's just my simple chart reading analysis. So now I want to go over some quick headlines with you guys, and then at the end of this video we're also going to talk about the movers, the biggest movers, biggest losers, and I'm going to do it in a little bit of a different style. So the next thing I want to talk about was Robert Kiyosaki. And I'm a big fan of Robert Kiyosaki. I love all his books and stuff. His comments can be like pretty bold, I guess you could say. So I just wanted to read the headline. Robert Kiyosaki will flee the country with gold. So I gotta watch this. I gotta be honest, I haven't even watched this yet, but I want to know what he's saying. So feel free to give this a watch, guys. I'm really interested to see, his opinion on the whole thing. All right, guys, the next headline. So India's gold market plunged in the first half. Here's how the second half looks. So recovery in India's gold demand remains uncertain in the second half of the year. India is one of the world's largest gold markets. The precious metal plays an important role in India's culture. So it's interesting to think, India has such demand for physical gold, but now, the fact that the price has gone up so high and currencies are losing value, is that actually going to hurt demand? Are people actually going to, buy less for their weddings? Because I heard that they use a lot of gold for jewelry and for weddings and things like that. So just wanted to bring something up and let you guys know that, gold demand in India did in fact plunge. So pretty interesting. But like I said, I wonder if that is because of higher prices. The next headline, gold's run hasn't quite finished yet, said Standard Chartered strategist. So I always like to give you guys some updates on what the analysts are saying. The gold rally still has some way to go despite its recent rumbles, says Standard Chartered Private Bank's Manpreet Gill. So let's see what this guy had to say. So gold prices have had a stellar run in 2020, having soared to levels beyond 2,000. They hit a pause last week as prices of the precious metals fell below 2,000. Gill says the recent pullback in gold prices was explained by a correction in higher bond yields. A rise in yields puts pressure on non-yielding assets such as gold, given the opportunity cost of holding the latter. Net of inflation, or what we call real bond yields, those have been sort of a one-way tear, and that's sort of lined up very nicely with the move in gold. There's many different things to watch when it comes to the price of gold. Bond yields is one thing that I haven't done enough research on, but I would really love to do more research on. But one thing that I know for sure that's pretty much tied to gold and the price of gold is the dollar. And we're seeing gold move up again. We're seeing the dollar drop off quite substantially, down 0.6%. So that is a pretty big move for the dollar. And like I said, we're going to take a look at the charts here for the dollar. And I feel like, we're testing yet again this very crucial level of support. And it almost looks as if the dollar has broken that recent, around 92. If we slip below 92, we can go back a couple years here, guys. In 2018, the dollar hit between 89 and 90 on the DXY. So it's looking a little scary for the US dollar right now. It looks like we could see some more downside. I definitely think that we're going to run into some support around 89, but we could see the DXY fall another 3 points. And that in turn would probably push the price of gold and silver much higher. So this is something I'm watching. I definitely think that this is a level that we should be watching. And by the looks of it, the dollar is experiencing some weakness right now. So good for gold, bad for other things, for currency traders, but overall, I'm pretty happy with that. Now, the next company we're taking a quick look at is MindMed, currently trading around 49 cents. And, we got to break this, rough 50-cent level. I think this is a key level to watch. And right now, it's looking a little weak. MindMed around 50 cents. Every time it gets to 50 cents, it's almost like it struggles. So I would really like to see, the next catalyst to push this thing higher into the mid-50s and hold that substantially. Because as of now, once again, I'm neutral on the company. I was getting excited. Now it's pulling back a little bit, around 49.50 cents. So we'll be keeping our eyes on that. And then last but not least, guys, gold and silver earnings set to shine this fall. So let's talk a little bit about earnings season. And I really think that the next quarter is going to be one of the best quarters for the precious metal sector, because the first quarter, production was ramping up. The onset of this whole global illness was starting. A lot of the miners still had decent production, but prices weren't as high as they are now. And then in second quarter, a lot of production got shut down for some companies, significant drops in production numbers in terms of ounces out of the ground. But I think for Q3 and Q4, if, the recovery continues, mines get back online and these companies start, getting production back up, I think that Q3 is going to be one of the most fantastic quarters. And that could set the stage for a fall rally. So it's a very exciting time, guys. I think that Q3 will probably be, the best quarter in terms of earnings season. I'm not going to look too far into the future and try and predict Q4, but for now, Q3 is looking pretty good. And we can quickly look at this chart right here, gold versus gold stocks 2011 to present. So blue is gold, and then of course the other two are gold stocks. And we can see that gold is technically outperforming. So That's the thing, you know, gold tends to be less volatile. The miners tend to underperform to the downside heavily in a bear market. And now we're seeing them play catch up. So I really hope that the miners can continue to play catch up. And I think precious metal mining stock investors are in for some exciting gains going into the fall. Alrighty guys, so that's it for the commentary on the markets today. Let's quickly dive into the biggest gainers, biggest losers, and we're simply just gonna have a quick little chat instead of just read names for you guys, as I want to provide a little bit more opinion, a little bit more value when it comes to these videos. One thing I've been noticing in the MJ sector is a tremendous run up for US MSOs. We've seen Curaleaf, TrueLeaf, we've seen Green Thumb Industries. So many of these American MJ companies just absolutely crushing it. IIPR having a great day. So that's what I'm watching right now, and I gotta say, ACB's been tanking. I'm happy that I dumped a substantial amount of my shares at 25 bucks per share and bought some Curaleaf and a few other companies, Afria. So we'll see what happens for ACB, guys, but I just wrote an article. They just need to deliver. That's really what I think it comes down to. Now, in terms of dividend sector, we are seeing Algonquin, Emira, and Northwest Healthcare, three biggest gainers on the day. I'm still a big bull when it comes to utility sector, and I will be doing more updates when it comes to dividend videos. We've put so much emphasis on precious metals over the last little while. We'll get to that later. And last but not least, let's take a look at the precious metal sector, and it's more of a mixed day. African Gold Group, Kootenay Silver, and Bonterra Resources, three biggest gainers. We are seeing First Mining Gold drop 8.49%. Now this stock has had a really nice run up over the last little while, and it's almost doubled, I think. It's gone from the mid 20s to over 50 cents per share. So I am happy with the performance in that one. Now let's take a look at the tech stocks, and we are seeing Amazon up 3.56%, pushing the markets to record highs, along with Tesla. Tesla's at 1885. Is this stock on track for 2000? I mean, I really think it is. Now at this point, it's almost like this thing's unstoppable. But is it the biggest bubble in history? I don't know, guys. There's many different, perspectives when it comes to Tesla. Okay, is Uber gonna, eventually have all Teslas? Is Tesla gonna make electric transport trucks? There's so many different things. I think there's a lot of speculation going on in the markets right now. I wouldn't touch Tesla, but for, the investor who's fearless, who knows how far it's gonna go. Last but not least, we're talking about our broader 2020 watch list, and JD.com is actually hitting 52-week highs today, which is surprising because Chinese stocks haven't been that favorable. Else Nutrition and Amazon also in the green today. Those are our three biggest gainers. Moderna, Air Canada, and Brookfield, three biggest losers. Now, last thing I want to say, Moderna hasn't had a very good run up over the last little while after hitting, almost 100 bucks per share. It's going to be interesting to see what happens to all these biotech stocks over the long run. But anyways, guys, that's it for the video. Thank you so much for watching. Let me know if you enjoyed the new style of videos or if you made it this far. And if you did, I appreciate you guys, but I appreciate everyone who watches. That's it. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.